Imagine you have just opened a cozy bakery in your neighborhood and the business is booming. Fresh loaves of bread flying off the shelves every day. But after a couple of months, you start wondering, am I really making a profit? You're selling loads of bread, but the bank account isn't growing as expected. Are you overspending on your ingredient? Is rent eating up all your profits? Or maybe you're not sure if you're spending wisely on staff, utilities, and other costs. Every business owner faces these questions. While you're focused on banking, you need to know exactly where your money is going and how much you're really earning. This is where financial statement comes in. They are like your bakery's health checkup. They help you track your revenue, costs, and profits to see whether your bakery is financially healthy or if you need to adjust things. For example, after analyzing your income statement, you might realize you're spending more on ingredients than expected, which helps you make smarter decisions about cost cutting or pricing adjustments. If you're facing similar questions or feeling uncertain about where your money is going, don't worry, you're in the right place. In this video, we will dive into the income statement. We will understand how to track your business revenue, costs, and profit over the time. The balance sheet. Here we will learn how to evaluate what your bakery owns and owes at any given moment. The cash flow statement. We will discuss how money flows in and out of your bakery to ensure you're able to pay your bills and grow. Then we will move on to real-time bank statement analysis. We will learn how to apply financial statement concepts using a real-world bank statement example from a bakery. Leveraging financial ratio for better decision making. Finally, we will use financial ratios into forecast, budget, and guide your bakery's growth. So let's get started. Before we take a deep dive in, I have a quick quiz for you guys. What does a balance sheet of a company shows? Is it income and expense? Assets, liabilities, and equity? Only cash transaction? Or is it profit and loss? Let me know your answers in the comment section below. Just a quick information, if you are passionate about advancing your business career and acquiring a globally recognized credential, you're in the right place. Simplilearn, in collaboration with IIM Indore, presents the Executive Certificate Program in General Management. This prestigious program, delivered by one of India's top business schools, offering cutting-edge curriculum focused on the most critical aspects of modern management, including business analytics, AI, and design thinking. You will gain access to high-impact learning experience, including a 3-day campus immersion at IIM Indore, where you will network with fellow professionals and IIM faculty. Over the course of the 6 months live online interactive program, you will tackle real business problems through a faculty-mentored capstone projects, enhancing your leadership skills and strategical thinking. The program is designed for professionals with 2+ years of experience and tailored to equip you with knowledge and skills needed for senior managemental roles. Upon completion, you will not only earn an executive certificate from IIM Indore, but you will also gain executive educational alumni status, unlocking access to exclusive network of leaders. So hurry up and enroll now. Find the course in the description box below and in the pinned comments. Let's get started. Before diving into any financial details, we'll start with income statement because it is one of the foundations of your bakery's profitability. This documentary shows how much money you're making, where it is going, and how much you are left with it at the end of the day. Now let's jump into income statement. This document is most important because it shows whether your bakery is actually making money. It tracks how much you have earned, how much you have spent, and how much profit you are left with. Let's break it down. Revenue, which is the sales. This is total income of your bakery generating from selling bread and other products. For example, let's say your bakery earns 50,000 from sales in 1 month. Cost of goods sold, which is COGS. These are direct costs involved in producing the bread, such as flour, yeast, sugar, and energy to bake. If you spend 15,000 on these ingredients, that's your COGS. Next is gross profit. This is your revenue minus the COGS. It shows how much money you're making after producing your bread. Gross profit will be always equal to revenue minus COGS. Next, we have operating expense. These are the costs of running your bakery, such as rent, salaries, marketing, and utilities. If these are total 25,000, then they are deducted from your gross profit to give you net income. Now, what about net income? This is your bottom line profit after all expenses. Net income will always be equal to gross profit minus operating expenses. By understanding your income statement, you get a clear picture on your bakery's portfolio, which is the first step to making smarter decisions about pricing, costs, and overall strategy. Once you have got good grasp of profitability, we'll move on to balance sheet, which is like snapshot of your bakery's financial health at a specific point in time. While the income statement tracks profits over time, the balance sheet helps you evaluate what it owes, which is liability, and how much business is worth, which is equity. The balance sheet is like snapshot of a bakery's financial health at a specific point in time. It shows assets, which is what you own, liabilities, what you owe, and equity, which is owner's stake. Let's move on to the key parts of a balance sheet. The first one being assets. This includes everything your bakery owns: cash, inventory, ovens, and property. These are divided into current assets, things that can be converted into cash within a year, like inventory. Then we have non-current assets, which are long-term assets like ovens and property. Next, we have liability. This includes debts your bakery owes, loans, accounts, payable money you own for suppliers, etc. Liabilities are broken down into current liabilities, which are debts due within 1 year, and non-current liabilities, debts that are due after more than a year. Next, we have equity. This is the difference between your bakery assets and liabilities. It shows how much the business is worth after debts are subtracted. By analyzing your balance sheet, you can access your bakery's financial stability and make informed decisions about your bakery's ability to meet its long-term and short-term obligations. After understanding profitability and financial health, we will explore cash flow statement. This statement tracks the flow of cash in and out of your bakery, ensuring that you have enough liquidity to pay your bills and sustain operations. Even if your bakery is profitable, you might face cash shortness if customers don't pay on time. So understanding cash flow is essential for smooth operations and growth. So let's move on to cash flow statement. The cash flow statement tracks how much money flows in and out of your bakery. Even if you're profitable on paper, you might still face cash shortness when it's time to pay suppliers or rent. Now let's see the categories of cash flow. The first one is operating activities. Cash generated or spent from your core bakery operations, such as selling the bread, buying ingredients, or even paying the wages. Second one is investing activities. Cash from buying or selling assets like ovens or property. Next one is financial activities. Cash from borrowing or paying back loans, from raising equity. Now let's move on to net cash flow. This is the amount of cash you will have left after all the business activities. Positive cash flow means that you have enough money to cover expenses and invest in growth. By understanding your cash flow statement, you will have the insight you will need to ensure your bakery remains financially liquid and can continue to operate smoothly, even if you face unexpected costs. Now that we have covered the basics of financial statements, we'll apply the knowledge using real-world bank statement from XYZ Bakery. By analyzing actual transaction, we will walk through how the income statement, balance sheet, and the cash flow statement comes together in practice. This hands-on exercise will help you connect theory to real financial analysis. Now let's take everything we have learned and apply it using real-world bank statement for XYZ Bakery in January. Here's a simplified version of the bank statement. Alright, now let's start by looking at the money coming in the bakery. Now the first step here is to record inflows, which is the deposits. Let's start by looking at the money coming in the bakery. On January 5th, you are depositing 15,000 from sales. Then again on January 15th, another 20,000 came from the sales. So if we add these together, the total inflows for January are 35,000. Next, we will record outflows, which are the expenses. Now let's check the money that went out. On January 10th, you spent 7,000 to buy ingredients, and on January 20th, you paid 8,000 as rent. And also on January 25th, salaries of 12,000 were paid. When we add these, the total outflow comes to 27,000. Now let's calculate the net cash flow. Here's the fun part. Let's see how much you can actually gain. Net cash flow is equal to total inflows minus total outflows. So 35,000 minus 27,000, which will be equal to 8,000. That means by the end of January, your bakery has 8,000 more than where it started with. Now let's check balance for accuracy. Let's confirm if this matches with the bank statement. You started the month with 10,000, add the net gain of 8,000, and the closing balance becomes 18,000. Perfect, it matches the bank statement exactly. This exercise shows how everything you have learned about financial statement, from understanding revenue and expenses to tracking cash flow, works together in real-world example, helping you manage and grow your bakery effectively. Finally, we'll be wrapping up things by learning how we use financial ratios. These ratios are powerful tools that you can forecast, budget, and make smarter decisions about the bakery's growth. Now that we have covered financial statements, let's look at how to use financial ratios to make better decisions on your bakery's growth. The first one being gross profit margin, which is GPM, which will be equal to gross profit divided by revenue into 100. This ratio helps you understand how efficiently you are producing bread compared to your sales revenue. And the second one is current ratio. Current ratio will be equal to assets or current liabilities. This ratio shows if you have enough short-term assets to cover short-term liabilities. And the third one is quick ratio. Quick ratio is equal to current assets minus inventory divided by current liabilities. A more refined measure of liquidity excluding inventory. Now that you have learned how to read and analyze the income statement, balance sheet, and cash flow statement, you have tools to take control of your bakery's financial health. These financial statements give you insights you need to make you informed decisions, optimize costs, and even guide bakery towards long-term success. Now that you have learned how to read and analyze income statement, balancing sheet, and cash flow statement, you have the tools to take control of your bakery's financial health. These financial statements give you insights you need to make informed decisions, optimize costs, and guide your bakery towards long-term success. If you have been wondering where your money is going or if you're truly making a profit, these statements will provide the clarity you need. You are now ready to make smarter decisions, drive profitability, and steer your bakery towards growth. So guys, don't forget to like, share, and subscribe to our channel. If you have been wondering where your money is going or if you're truly making a profit, these statements will provide the clarity you need. You are now ready to make smarter decisions, drive profitability, and steer your bakery towards the growth. So guys, don't forget to like, share, and subscribe to the channel. Thank you for watching and keep learning with Simplilearn. Hi there, if you like this video, subscribe to Simplilearn's YouTube channel and click here for similar videos. To nerd up and get certified, you can check the description box below.